One and live.
Good morning, everyone. It is 8:31, so we're going to go ahead and get started. This is a meeting of the Audit Committee for MES on October 20th, 2022. There's a lot of 20s in that date. We're going to start with approval of the minutes, unless there is dissension. If anybody has any recommendations or amendments, please speak. Otherwise, we can assume they are approved by consent. Hearing none, why don't we move on to the RSM preliminary report on FY22 audit, and Ms. Coleman from RSM is here to join us and walk us through it.
Perfect. Good morning, everyone. My name is Valerie. Good morning.
Thank you for joining us.
Yes, absolutely. My name is Valerie Coleman. I am with RSM, and my colleague Philip King as well is with us this morning. We're going to present the presentation. So Phil, can you please go ahead and share? Hopefully we have the sharing capabilities all squared away.
I will need some share rights to have control sharing.
Sure.
AC, can you do that?
Treasurer Davis is here.
Good morning.
How is everyone?
Doing well.
Cold.
Okay, you're set.
Inside.
Okay. Wonderful. Thank you so much. So we're just going to go right into it. Again, we are very pleased to present this report to you guys today for FY 2022. We're here to mainly help you with your responsibilities as those charged with governance. We're going to skip to slide 4, which is our executive summary, to give you an overview of what's transpired. So we are in the process of completing the audit of the service for fiscal year 2022's financial statements. After completing our remaining procedures, we expect to issue what is deemed an unmodified opinion on the financial statements. So essentially a clean opinion again. The key open areas that we're finalizing is wrapping up our review of a particular GASB that we are implementing this year, GASB 87 leases. Wrapping up a few of our actual reviews with our specialists as it relates to the OPEB plan, and completion of the engagement quality review and final subsequent event inquiries that we make with management. So all of those are needed to kind of wrap up. It's the final stages. And
excuse me. I'm sorry, maybe it's just on my end, but I'm hearing some feedback that's making it difficult to hear. Is it just on my end?
I'm hearing it as well, and I believe it's in the conference room because that's who is lighting up when we're hearing it.
Okay.
Perfect.
Thank you.
Thank you. Wonderful, much better, yes. So again, just to reiterate, there's some key open items that we're finalizing in our end, and then we can go ahead and issue those statements. So there were no significant changes to the planned audit strategy. So we sent a communication, or essentially we started off the audit cycle meeting with you guys back in May. So what we sort of communicated then still is intact throughout the whole process. If there were any sort of changes through that strategy, we'd be required to inform you. And there were no changes as it relates to that strategy first communicated. There is an adoption of a new accounting policy. All of the governments are really going through this at this moment. It's in regards to the lease standard. So that is called GASB 87. So we've worked with management as it relates to their implications this fiscal year. And that is something that you'll see that's slightly different in their financials because of the adoption of this accounting policy. We are still in the process of evaluating any sort of audit adjustments and any uncorrected misstatements. So really at the end of the day, there is none to report at the moment, but once we wrap up our engagement quality reviews and so forth, if there's any that do pop up, we'll be sure to communicate that your way as well. Next slide. So just a few things that are part of the required communications. So to begin with, again, there were no changes to the plan scope and timing of the audit. So once again, what we communicated back in May is still intact, and that has been our plan throughout. any sort of preferability of accounting policies and practices. So normally what happens is if there's a possibility that you can go 2 routes for a particular conclusion in an accounting policy, we'd be required to kind of present that to you and say, you know, route A is this way, route B is this way, this is how management decided to conclude. There was nothing of that nature that popped up for us to communicate to you today. There is that adoption of that new accounting policy, which is GASB 87 leases. And really, there weren't any sort of significant policies that were controversial or emerging areas or anything of that nature that we had to communicate with you today. There weren't really any significant unusual transactions. You know, the service is running its main mission and so forth. So there wasn't anything out of the norm that we'd need to communicate as well. So I'm going to pass it over to Philip. That's going to go over some of our significant accounting estimates. Just to put in some clarity, significant accounting estimates are very much a part of the financial reporting process. This is an area we kind of focus a little bit more on just because it's the ability for management to essentially potentially exercise some judgment. They use the process of, you know, historical data, any sort of future data that they're aware of to kind of help them assess how they account for these sort of transactions. So we're going to go a little bit deeper into some of the key significant accounting estimates that we noted this cycle. Bill?
Sure. So I'll go through and through the slides and explain the significant policies that we evaluated, starting with in the receivables. The MES has a policy to review old or the receivable listing for any potentially uncollectible items. The amount they recorded is very immaterial to the financial statements, but it is we consider a significant policy, and we do review that and felt it was that the reserve recorded was accurate. Related to the capital assets, we identified due to the significance of the capital assets, the depreciation methods, and the period over which those capital assets are being depreciated and how they is reflected, or the level of depreciation reflected in the expenditures. So again, we also review that in great detail and test that, and we're very comfortable with that. We also identify, again, due to its size, the valuation of investments, both in the entity, in the fund, as well as in the fiduciary, so for the OPEB. And we again, we're comfortable with it. We do explain a little bit here, similar to what's in the notes of the financials, the methods of which they're valued. The organization is using or invest in assets that are easily valued, and so we call that sort of the most observable prices. We did not see any difficult to value investments that we had to evaluate. On the liability side, we had identified a few liabilities with significant estimation involved. The first one is obviously going to be the landfill closure and post-closure costs. I think it's important to know that and be aware of the MES utilizes a specialist to assist in that. That's a little more complex area. Again, review this estimate and we're comfortable with that. Similarly, for the pension, as well as the other post-employment benefits, the OPEB, both of those liabilities involve a number of significant estimates. We focused on some of the key estimates, including like the discount rate and how that, so we look at how it's calculated and we look at how the liability is discounted down and amortized and how they, so we're looking both at the liability as well as what expenditures are reported. Again, this is a very specialized area, and so MES relies on a specialist to assist with the calculation for the OPEB. The liability for the pension is really calculated by the state, and then MES reports its share of that state pension liability. So those are both calculated a little bit different, but just be aware of, I think it's important to be aware of that. On our end, because of the significance and the number of the specialization and the number of estimations that's involved in the pension and the OPEB, we actually also utilize a specialist who joins our team to assist us in calculating those two liabilities. And we were very comfortable with those liabilities. So with that, I believe that is the last of the significant estimates, and I will turn it back to Valerie.
Perfect. Thank you, Philip. And really here, what we wanted to showcase in the last couple of slides is some of the other areas that you'll see that might be different in the reporting package overall. So we do have some additional paragraphs in our opinion. One is in regards to required supplemental information. So essentially, there are some additional areas within the financial statement package that are deemed unaudited. So we do not opine on those particular sections of the report. However, we do perform procedures in terms of reviewing, reading, and ensuring that the messaging in those areas do coincide with the areas that we do have an opinion towards, the audited areas. So those are regards to management discussion and analysis, some of the schedules that are required for the OPEB liability and their related ratios. So we just wanted to kind of insert what that paragraph will look like and what its meaning is behind it. The one underneath, other reporting required by government auditing standards. This is a governmental entity, it's a quasi-governmental entity. So we do perform our audit under government auditing standards. And this paragraph is explaining that we've looked into that regard. Essentially what that means, it's a little bit more of, we kind of call it audit plus when you perform those audits under government auditing standards. It requires you to have certain specialties. The team has to have the certain required continuing education and so forth. So this is what that opinion is essentially indicating, that this audit was completed under government auditing standards. The next slide is the audit adjustment slide. And as I indicated in the onset, we are still evaluating that. That will be finalized once we really finalize everything. At the moment, there is nothing to report. So essentially what that means is the trial balance and the reporting package that we were provided with when we came into and started the audit process is essentially the same numbers that we were reporting at the end. Management does have a few, what they call provided by client PBC items that they provide to us, but there's nothing that's been noted through the audit process that is material enough that needs to be adjusted. And again, should they arise, we will be sure to communicate that. Some other reporting, like we indicated, this is completed on government auditing statements. So it is in yellow book is what it's the other nomenclature for it. And if there are any sort of findings, we'd have to kind of isolate that. We have nothing to report at the moment. We are also in the process of wrapping up what is the Uniform Grant Guidance, the federally funded program audit. There's nothing to report as it relates to any issues there. There are two other reporting factors that we work with management. One is called the Schedule of Indirect Costs, and the other is the schedule of the 6th customer report of indirect overhead costs. We will work with management subsequent to the financial statement reporting process to start that review of those particular costs. So that will be delivered later on after the completion of the financial statement audits. And the last few required observations about the audit process, with the exception of GASB 87, which is the leasing standard, we really didn't have any significant issues arise with the audit or any sort of major discussions with management relating to any particular transaction or anything of that notion. We had no disagreements with management. We did not encounter any sort of significant difficulties in dealing with management during the audit. We are not aware of any sort of consultations management had with other accountants about accounting or auditing matters. So essentially, if we were to provide a conclusion about an accounting matter, management may have not appreciated that conclusion. They could have gone out and get a second opinion, and we would be required to let you know about that, and that did not transpire. And we did not encounter any sort of significant and difficult contentious matters that required outside consultation within the main engagement team. So if there was any sort of particular accounting transaction that transpired where we would need to sort of run it up the chain to our national office, we would be required to let you know about that, and that did not transpire. And lastly, what we've done is we have one appendix, and what we're required to share with you is any sort of communication that happens between our firm and management. So right now what we have is what is deemed the draft representation letter for the two engagements at play, the financial statement and then the Uniform Grant Guidance. Essentially, when everything is complete, the very last day, right before we issue our final opinion, we present management this letter where they attest and represent certain key notions. And we just provided the draft so you guys can take a look into it. And really that's it. This is just the draft representation letter overall. So yes.
Thank you, Valerie, and thank you, Philip. Does anybody have any particular questions at this time?
I do not have a question. I just have a couple of comments. I want to thank Valerie, Colimon, Philip, King, and Rochelle. Those are the three people we work directly with throughout, I think, last couple of months. However, as Valerie mentioned, that they have a whole team of experts behind them too. So they review it. As a matter of fact, their review is pretty thorough. The review team takes their time and, ask the questions. So they've done a thorough job. I just want to point out a couple of things that, as Valerie mentioned, that our audited financial statements will be unmodified, clear opinion on it. We do not have any uncorrected misstatements. And even though we do not have the final report as of now, as Valerie mentioned, what MES presented to them is going to be the final statements. There will be no major or material changes to it. So I just want to point it out that we are what we presented to them is conforms to the accounting rules. And I want to thank my finance department also, because we are getting this kind of unmodified opinion for many years, as long as I remember. So thank you very much.
Thank you. And clearly, an unmodified opinion goes to, it really show just how good Mr. Patel's office is working. So thank you. And I know that the GASB 87 is throwing everybody through a loop. I've been hearing repeatedly about GASB 87. So thank you.
When will it be finished? When will they?
I think we already submitted to the state the draft statements, because it is going to be the same in the final statements. But I think per schedule, we should receive it by end of this month, correct? Or is it going to be a little more, Valerie?
It might be a week or two more, just because what's happening in our second layer review, because all the documents are going through GASB 87. Again, we get an engagement quality reviewer on everything. So that requires them to kind of dive in a little bit more. So always with the implementation of a new GASB, there might be an additional week or so, but we are working with that second review.
Thank you.
And we did, because the state of Maryland requires, like around the October 4th. And so we already sent them stating that there will be no significant changes to what we have presented to the state comptroller's office. And if there is any changes, we'll let them know. So I think we are in good shape with state deadlines too.
Okay, thank you. Thank you very much, everyone. Ms. Condra, we have the internal auditor report.
Yes.
Good morning.
Good morning. Good morning, everyone. Waiting for the presentation to pop up.
Troubleshooting the volume issues with Casey.
All right. Next one. Which one is it? The red?
Nope.
Aim it that way.
It didn't do anything.
Very good.
Oh.
I got it.
There you go.
I got trigger happy there. All right. So the agenda that we're going to cover today is just basically giving you internal audit, the department updates. We're going to talk about new staff, about FY23 audits that we're doing. We're going to talk about the fraud hotline log and a summary of a special investigation. So we have a new hire. Hire started yesterday. He's the audit trainee. He graduated from the University of Maryland with a Bachelor of Science in Economics. His background is customer service, data analytics, and he does have some supervisory experience. And he's from Maryland. So have a He's excited to join MES, and he had a great first day yesterday.
Did he come back this morning?
A second, he said he's supposed to be at 9 o'clock.
That would be a good sign.
So for the audit updates, in terms of what we're doing this fiscal year, we're continuing off on the review of the Hartford site management due to priorities in hotline investigations and special investigations. It was on hold. It has commenced where the audit testing completion is October 14th, draft audit report today, and final distribution is tentative for October 27th. The next audit that we're performing, this is the first audit that's in our FY23 audit plan. It's the review of the contractor MBE SBR waiver process. It's currently in the planning phase. This is going to be a short audit. The audit testing completions looking tentative for December 1st. The draft audit report tentative for December 12th, and final distribution tentative for December 21st, 2022. Any questions on that? Okay. So, fraud hotline. Last time we met, we were no calls. Basically, these are not really calls within us, but there's some external. So the first one we have is a conflict of interest allegation that came through the OLA hotline. We were notified in August 12th. That was completed and it was unfounded. So that's what's really good. September 17th, we were notified of a hostile work environment through the STAR Commission. At this point, it is actually, this allegation came through different avenues, EEO, and it was unfounded on the EEO side. It's actually still open on another agency side. So at this point, per regulations, we cannot do an investigation until it's closed from that other agency. So the next one we have misuse of resource that came through the OLA hotline. We got that notification September 29th. We're currently in the process of reviewing that. Based on what the information with OLA, the caller didn't give enough information. There's not really a lot of evidence. So we're just gonna look at what we can, basically from a data analytic perspective.
Could I ask on the two OLAs, that's Office of Legislative Audit?
Yes,
Okay.
yes.
Just to make sure. They contact you directly?
Yes.
And then on the first one where it was unfounded, you circle back to them?
So how it works is when they come to MES to do their audit, then they would want to see the report on that. So they don't really want us to reach back to them. When they come in to do their audits, then they'll ask about the hotline investigations that they send to us.
But that's like every 3 years.
Yes.
So that's kind of a cold dish after. It just seems odd that you if you could put something to bed, you'd put it to bed. To wait for the next audit could be 2 or 3 years before it gets off.
But that's their process.
Well, but MES is still obligated to address any issues that we do find. So we would still handle it internally in terms of.
No, understood. But when the allegation comes from an outside agency, and let's just say you handled it and there was something substantive and you dealt with it, OLA wouldn't find out that you dealt with it until they did their audit. And to me, that seems loose. It just does. And that's an OLA issue.
So I wanted to let everyone know International Fraud Awareness Week, while we're on the topic, is November 13th to 19th, and this is where I had MES as a fraud awareness supporter, where during that week we'll send articles out, educating our staff about fraud, what to look for, and hopefully it either is going to drum up more calls or they'll be more alert to it. So that's what we're going to do. So one of the articles I'm going to publish via our newsletter or intranet is how to be a fraud fighter in your organization. So not relying only on management and the audit team and environment compliance, but kind of looking for those signs and being proactive. All right. Any questions? So Dr. Glass mentioned this in the HR committee meeting regarding a special investigation where he requested that audit look into the summary, looking at exceeded salary within the grade of an employee. So when we looked at that, wait a second, I went too far back. Okay, sorry. We performed the investigation of the employee annual salary range within their grade, and we identified that 66 out of 704 employees exceeded their salary range. And it's 10%. It's not a lot, but still, what we saw was mainly due to HR's non-compliance to MES's wage and salary program, looking at the salary structure, which was implemented in August 2004. And also we saw that it was due to lack of segregation of duties in Workday and the salary change process. So I just want to talk about a little bit about the segregation of duties. It's basically one person was doing the changes and no one reviewing it as before it's finalized. So a management might have approved either based on cost of living adjustments or PBCs, but no one else checked it, that review and final approval process. And so that's what we were missing. So internal audit recommends the following. HR implements the salary change process. And I know you guys have heard this before, Dr. Glass?
Well, some of them, but some of them weren't in the HR committee.
Oh, gotcha. Okay. So HR implements the salary change process aligned with the existing salary administration guidelines to ensure salary does not exceed the grade's maximum salary. The second is HR works with IT to develop segregation of duty steps within Workday to ensure the chief of HR is reviewing and approving salaries reaching the maximum. This will eliminate any bypassing of increases that may exceed the maximum salary. Also, the third but not last, is chief of HR develops a process to notify the executive director of salary structure matters and engage the respective managing directors to reach a solution. Any questions?
Just that internal controls are very important. It's usually what auditors first check and review. And this was an instance where one person could input salary data or setting salary. And that needs to be either supervisory reviewed or peer reviewed. So this is one. My intuitive question is there anything else in this organization where one person can make a substantive change? And if it is, we ought to change it so that we have internal controls so that we don't have a recurrence. So it might make some sense to review our internal controls in-house to see that one person can't do that.
Yeah.
Chances are, I think in 2004, life was different. So
Yeah.
My thought is that over a period of time, it just sort of sat in one bowl, which now has been lifted. Let's put it that way.
Yeah.
So, obviously, if anything else turns up, it will be appropriately taken care of.
Yes. And we have to understand that before we didn't have an auditor, internal auditor for 2 to 3 years. So a lot of things went through the cracks, and hopefully with the extra person that I have, we can cover more audits.
Well, I'm just going to, as a member of the audit committee, I'm going to make it a formal request that the internal auditor review all of our fiscal processes to make sure that there are no more instances where one person can make a significant financial change. And once we do that, we know we won't have a recurrence.
Mm-hmm.
If I may, Madam Chair.
I think that's a valid concern and request. Mm-hmm.
I was running a little county locally here. Nothing of significance got done unless my budget officer, my county attorney, and my chief administrative officer's initials were on the document. And that prevented me from wearing horizontal stripes.
Absolutely. And my county is just a tad smaller than the county that you were working for. And we make sure that the internal controls are tight. It was very difficult when I started in local government and I worked for the circuit rider town manager. And when you have a staff of 3 people, it was a lot harder and we were always getting dinged by the auditor, but we should be able to accommodate that in an organization the size of MES.
I think so too. Thank you.
Mm-hmm. Okay, thank you, Ms. Condra. And welcome, Mr. McGinnity. Is that how you pronounce his name?
Yes, yes.
Okay, wonderful.
McGinnity.
He said I said it right. McGinnity.
McGinnity? I've been saying it. No, I've been saying it wrong. He hasn't corrected me.
Well, you're his boss, so first day.
So second day, that'll be a second day action item for him.
Yes. I'll be bringing him around and introducing him.
I introduced him. Well, he was at the onboarding yesterday, so I introduced him.
So we are now down to old business and new business. Is there any old business that we want to touch on? Any new business? Okay, and I'm guessing that we're going to be hearing a little bit more about the summary of exceeded salary from the HR committee in today's meeting. Is that correct? Or are we not going to touch on that? Mm-hmm.
Touch on it.
Okay. Wonderful. Okay, and I think that concludes our meeting.
You hear more on it, and the other actions to mitigate were in the HR committee, but the audit was.
Okay. And welcome, Dr. Glass. Glad you could join us.
Sorry, traffic. Everybody's going back to work now.
A lot of traffic, yeah.